let me also bring on board Pashupati Advani. He is from Global Foray, of course. And Pashupati, great having you. But Kunal, just
Good
kind of
afternoon.
completing and rounding this up, give us a sense. BSE, Wipro, how do they look on charts?
Yeah, I think BSE starts to look now a little bit more attractive because of the 20% odd correction the stock has gone through in the last two and a half odd months. I think from 4,400 levels towards 3,000, 350, where the stock formed a decent base, bouncing off from its long-term averages. The mean reversion sort of seems to be completed for BSE. Historically, what we've seen is that the stock, whenever it's gone through periods of corrections, which have lasted for more than 2 months or 3 months, the average correction for the stock has been around 20% to 30%. Broadly for the stock price. So which means that's why I was indicating that maybe the stock has entered into the territory where medium-term investors should start to look at BSE with a slight positive bias. And for Wipro, I would sense that I think there are better stocks available in the Nifty IT space as of now. I would still look at the more formidable large cap IT stocks, the likes of HCL Tech, Infosys, TCS as preferred bets over Wipro.
Okay, that's the pecking order when it comes to some of those IT names that Kunal's flagging off. But Mr. Advani, hi, good afternoon, and thanks for waiting by. Good to be speaking with you. How are you looking at the markets right now? Last week, we've seen ups and downs coming in the market. It was the first week of the CAS adjustment coming into play as well. Today, we're as range-bound as ever. Give us a sense on how you're looking at the markets and where are we headed from here?
Well, I think, this balancing of the indices is obviously something that is good in the long term because, I particularly have been kind of soft on IT. I don't think that we've been able to perform. So the fact that Wipro is going to leave the index will probably lower the IT in it. And I think that's good because, indices have a way of kind of reacting to what the market wants. And obviously the market wants the Nifty 50 to go up. And therefore, the stocks that are pulling it down, they want to hold it. They want to get rid of those and substitute those for others that are jumping. So I guess it's a natural bias which is actually happening. Again, I think it's been very, very quiet also because there's huge uncertainty, because of the Gulf War and, the on again, off again of the US government with Iran and, all the permutations and combinations. I believe Iran threw some drones at the UAE over the weekend, so that's also not such a great thing. But it's not escalating, but they just everyone's sort of doing their little bit to make sure that the war is still there in the background. And so obviously anything for that could hurt us, but we are so far insulated, and we so far have loaded up buying oil. And actually, what's happened is that I think all the countries that were short of oil have loaded up and put stuff away, and now they've gone back to buying gold because gold seems to have moved up about 10% not 10%, but 5-6% in the last week or so. So that's all good.
Okay, appreciate that view coming in. Apologies, Mr. Advani, we'll have to slip into a time-bound commercial. We'll be right back on the other side of this very short break. Keep the conversation going with both Kunal as well as Mr. Advani. Stay tuned.
Welcome back and thanks for being with us. Pashupati, coming straight back to you, trying to get a sense therefore. How are you looking at IT? You were pessimistic, if I recall right, the last time we had spoken. Anything changes for you, or is there a certain segment within IT that you're liking? Sorry, please go ahead.
No, so I am still pessimistic, but IT seems to have caught something of the bottom and then moved up from the bottom in a lot of certainly the larger IT companies, and they've shown some strength. So they are trying to get their act together, and I think they will. And obviously, there's many a slip between the cup and the lip, and therefore you've got all these ideas which, everyone thought AI is going to come and change everything and make everything go crazy. It's coming, but it's coming slowly, and it requires a different skill set, and some of it our IT companies are beginning to provide. So I think it's not going to be a sort of a dump, but I think it's going to be, I'm still not pessimistic on the sector.
Mr. Advani, that's your view on IT. And other than that, given the Q1 earnings and how the trends are playing out in the market right now, how would you best play consumption?
Well, you have to get something that is domestic, which does not have any any import in it. And, so therefore people are going back to the FMCGs and back to the local FMCGs. And of course, oil companies, because oil is going up and they should also do better. So that's another sector that's doing well. I'm not so wild about the banks. HDFC Bank, which is a major part of the index, is down quite a lot from its highs. It's down, I think, 25%, if not more. And, it seems to be having its own issues. The others seem to be hovering in there, but that's pulling the bank index down. Who knows? I mean, I think we are having a sort of what is the word for it? Revisiting, realignment of the whole index. And I think that's happening. So people are actually making positional changes.
Me?
And sorry, I'll come straight back to IT. Pashupati, how are you seeing the environment evolve, right? Especially with regard to AI. I'm trying to get a sense as to whether certain product companies in India, investable, are catching your eye, probably getting beaten down, maybe unnecessarily, or any trend that you're spotting where you can play AI slightly better, where there's some value capture left?
Well, the reality is that the Western world seems to have written off India for AI. I personally believe that we have got some niche markets in there where we can come in, but they have to be proven. And so far, whenever any of the IT companies have given any guidance, they've not actually been too sort of what I would say pakka about that this is going to happen and this is not going to happen. It's beginning to turn, so maybe next quarter we'll see better guidance. But at the moment, we're seeing companies all over the place, and they're not really able to step up. And they're trying to figure out what they can do in IT to make themselves relevant. And I haven't yet seen a business model from any of our big companies or small companies that says, here's the solution, this is how we're going to play the AI market as an IT company, as an Indian IT company. So I haven't seen it yet. And if you have, please share it with me.
So you'd stay away. You stayed completely away for the moment.
Yeah, for the
And probably
yeah.
you'd only play through the product companies in the US, right? Pashupati, is that the right way to kind of think of how you're thinking of AI and this entire?
Well, even those are also having their own issues, because it looks like Chinese AI is 1/10 the cost of US AI, and therefore people are looking at the spreadsheets there, and we've had these huge drops in some of the big companies. But the reality is, data centers are going to be needed. We are needing more computing power. We're going to need power, so actual electrical power to run those data centers. So I think all these things, that's where the values are, and that's where we're going to have to invest. So, electrical power is a simple thing that, you need it. We're short. Prices have to go up, except for the fact that the government controls the prices. Everything else is good for it. And, so I think that's a sector that also one should be looking at properly.
So then power ancillaries and the like, is that probably the best way to play this theme?
Yeah, absolutely.
Okay. And would you
power,
at all
power
venture?
Ancillaries,
sorry, please go ahead.
Telecom, maybe. Yeah, maybe telecom also, because we're still needing data, we're still needing information. So telecom ancillaries, these are all the plays. They're still the hot plays, and I think people will continue. And these are, I would say, necessities. We can't do without them. So I mean, that's what it is.
Look at power transmission and power exchanges, because we're speaking to a couple of renewable energy companies, and they were suggesting the gaps are on the power transmission side of things. So transmission exchanges, what's the view there?
Well, exchanges were there to stay. I think everyone is using their own power, so they're not pushing that much out on the exchange. But I think that that exchange business for power is definitely a business to be in. Power transmission also, because it's being produced in different places from where it's being used. So as long as that continues, I think that's something that will be required. So yes, that's a sector also that I'm quite comfortable being in for the long term.
And Mr. Advani, before this, you were talking about some sectors that have become absolutely essential, and they're the new age themes. Speaking of which, how are you looking at certain themes like beauty and personal care, some of the platform companies, some quick commerce, food delivery companies? How are you looking at all of these names? Do you believe the valuations are perhaps maybe too high right now, or do you believe that these companies have such a growth leg room ahead, or the run up ahead, that valuations could perhaps take the backseat right now?
So what's happening is that as we get wealthier, people are going to start using more and more of these companies. I think what's happening now, we're at an inflection point where people are actually beginning to tighten their belts a little bit. So they are actually not buying, 300 rupee coffee cups at Starbucks, or they are trying to use less makeup. I know you put Nike on the screen, but that, something like that. But the reality is that I think these habits are here to stay. They're very difficult to change, and certainly the next generation, my kids and all the others, love this kind of thing. I mean, certainly with people staying in smaller units, like 1 and 2 and 3 people, they are quite happy to have Swiggy. They're quite happy to have Nika. They don't want to go to shops. They would rather have it delivered to them at home, and that's a whole uh, change of mindset. I mean, I think in our parents' generation, they wanted to go and feel the tomatoes. In this generation, we live with some tomatoes coming home. The next generation, they want it only to come home. They don't want to go to the supermarket. They just want delivery. They want it easy. So I think that this is what it is. But whether the trend changes for the better or for the most, right now it looks like the trend is there with the Zwiggis and the Eternals and Zomato are there, so they're here to stay.
How else would you play consumption? Just give us a sense, Pashupati. How would you look at the FMCG players and say that this 5-6 years of no moves on an HUL presents an opportunity, a compelling one?
Well, I think there are new players coming in. I believe that, Reliance has taken a pretty aggressive stand in the FMCG space. And where Reliance's numbers show in that space is somewhere in the big block that's Reliance Industries. So I believe they're giving HUL a bit of a run for its money and coming up with Indian competitive products, Make in India type products that are fighting with HUL products. They're also pushing in the distribution. So, HUL is a separate issue, but I think, you see the sort of Indian FMCG like a Haldiram or something. Those are, people are still buying. Again, that's habit. Is Haldiram snacks healthy? Who knows? Who cares? But the reality is that people are buying them. So as long as that trend continues, I think that will be good.
Okay, and also just trying to understand how you're looking at consumption trends. The premium end is obviously doing very well for itself, likely to continue in your opinion, and therefore auto, there's a watch distributor, Ethos. There's Titan and the like, which also does watches, eyewear and the like. That end will continue to do better, you reckon?
Yeah, I think the premium end you can just forget about, because there is such a gap between people who are buying premium product and the rest of the market that it's really I think it's a price insensitive market almost. And the fact that people are moving a lot of cars, autos are actually at a lot of deliveries happening at the moment, and also premium autos, a lot of deliveries are happening at the moment. You mentioned other luxury brands like Ethos. People are looking out to spend money. And I've been watching some YouTubes on how to use credit cards to get points, which then translate into goods and holidays. So these are all the things that are happening in the market. But the reality is that India is changing. We are getting richer, and we're going to suddenly tip. Right now, we are just below the tipping point. But if we suddenly tip and the per capita income goes up, then suddenly consumption patterns will change and India will become a very different place. And that's the way I think it's going. So.
Okay. Understood. Hold that thought, Mr. Advani. We're going to quickly shift gears because the Supreme Court may soon hear a review petition challenging its recent ruling on the notional income of homemakers in the motor accident claims tribunal cases. My colleague Anurag Shah is joining us with more details on this. Anurag, over to you.
Supreme Court is likely to hear review petition in notional income for homemakers case, and as per our sources, a review petition has been accepted by the top court, and the court is likely to hear the review petition soon. On 11th June, an order was passed by Supreme Court to fix the notional income for homemakers as 30,000 rupees per month, and in that connection only review petition has been filed because insurance industries is seeking a methodology to calculate the compensation amount, and insurance industry is also mentioning a previous ruling by court where in a similar case, in a similar type of a compensation case, a court award mentioned a wage amount of 2,500 rupees per month in year 2003. So review petition is seeking a methodology to calculate the compensation amount. Previously, most of the insurance companies, general insurance companies, has increased their provisions after the court order, and because insurance industry is expecting that their loss ratio may increase and overall compensation for motor third party cases MACT order may increase after the Supreme Court order. So in this context only, review petition has been filed seeking a methodology for the compensation amount, and top court is likely to hear the review petition very soon.
Okay, Anurag, thanks for taking us through that. That's the latest update over there. And of course, we'll keep you abreast with the latest developments on that front. Mr. Advani, how are you looking at the insurance space? Because last week also, when there was this news coming in that motor insurance for 2- and 4-wheelers is now going to become compulsory for an extended period of time, you did have some general insurance companies that started to do well. And now my colleague Anurag was also highlighting some of the insurance developments. How are you looking at insurance?
Well, more cars, more two-wheelers, more insurance. I think, again, a trend of having a higher policy limit for home insurance is less. I mean, most people underinsure their homes, but I think that's also changing, and people are actually stepping up and giving bigger checks. I think if the government gave some incentive to insure your home, and allowing some deduction for health insurance, similar you have a deduction for home insurance, then that would be a huge industry and would be a huge plus for all the insurance companies. In the meantime, they're doing well. They've got money. They've got investments. The markets are doing okay. So, they're making money and they're all, look profitable. So I think it's an industry definitely to be in.
Mr. Pashupati, just on that note, are you preferring general and motor insurance perhaps over your traditional life insurance names?
Well, I'm actually a little surprised that LIC has got hammered down to where it has. It's always been the sort of bellwether insurance, but it's trended down a lot. So I think the answer is maybe to go into general insurance now rather than into life insurance. Though life insurance should also be picking up, but I think that people are buying cars. They're not taking out life insurance, but they're buying cars and they're buying two-wheelers. So I think and the fact that you do need some kind of compulsory insurance, I think that will remain. So I think that's good for both the industry. And as I said, as we get richer, more money will go into insurance, and I think that's good for the sector as a whole.
Okay, we'll take a bit of a breather, slip into a break, come back. Pashupati, Kunal, please be with us, and we'll address that last 20-odd minutes of trade. Of course, including the cash segment. We will address that on the other side. Stay with us. Welcome back, and the cash segment, of course, playing out in markets as we speak. You can see some of the moves. Let's pull out an SBI Life if we can, because saw a spike on that stock. It's cooled off, of course, from the highs. But you also saw a bit of a spike on an ICICI Bank. Some moves being made, of course, and we're tracking those moves. But in fact, SBI Life is again up 1.1 odd %. But Kunal, How's it looking, at least in trade today?
It's a little volatile. I think that Friday effect, which was there, where the markets were a little eased off, I would say that slight bit of volatility sort of comes back again. But again, I think we need to see and wait till 3:30 how the closing goes. But then I think I don't expect that we could probably swing by at 200 plus points what we did at the start. Maybe I think the tone for the swing in the markets or the indices specifically, I think is less than that at least. And I think if that happens also for a good part of this week, that also indicates that the markets are adjusting to this new reality.
Okay, that's the take coming in. And you know what's really standing out in the gas segment right now is some of the names from the QSR basket are doing really well. We've seen a sharp spike coming in on Sapphire Foods, 1.25% uptick over there. You've got Devyani International that's doing well in the gas right now. So good move coming over there as well. Mr. Advani, how are you looking at QSR as a space? It's been underperforming for the longest time. This time, however, for Restaurant Brands Asia, for Devyani, Westlife, we've seen a turnaround coming in, while Jubilant is still expected to be slightly under pressure because of that LPG impact. But do you believe that the turnaround for QSR is finally here, and is it here to stay?
Well, I certainly hope that it's here to stay, but I think that, again, it is to do with the fact that are we becoming a richer country, and are we beginning to upgrade? I mean, one of the things that's happened in Mumbai, as you well know, is that the FSSAI has raided some 2,100 restaurants. So certainly they've pushed people from non-QSR to QSR. So I'm sure that's going to make a big difference. And I think that certainly we need to get cleaner food, and everybody seems to be happy about that happening. So having said that, I think that you've got an issue where people are seeing it and are going out. And previously maybe they'd go to the road to eat. Now they'll go to a QSR, and hopefully that trend continues. And as people get richer and richer, that'll be good for all these companies. And we are at that inflection point, I feel, that we could suddenly jump.
Okay, and what do you make of what's playing out in the gas in this entire slightly new mechanism of closing and cash? What do you make of that, Pashupati? I wonder what your view is.
I think the SEBI should write manuals and give them to all retail investors, because they seem to be losing their shirts in this. So I think that some protection has to come. I think they've turned some of the buttons off and made it a little slower, but I think that it's still extremely confusing, and also, unfortunately, given the spikes that we're still seeing, extremely manipulative, which is not good for the retail investor. And I think SEBI's job is to actually look at that and to try and protect the retail investor. So either you tell them don't trade, or you tell them that we're going to protect you from these crazy spikes. And I know that a lot of people got hit last week, and it seems to be still continuing because the spikes are still there.
Working on that manual?
Yeah, reading the manual.
Sounds like an opportunity.
Waiting for the manual to come so that I can read.
But speaking of spikes, on the downward side, we've spoken about some stocks that are doing well in the cash segment. On the downward side, however, Aegis Vopak is low by 2% in cash. You've got Acme Solar seeing a cut of 1%. Bharat Forge continues to read under pressure, as is the case with the Zydus Wellness. Jindal Saw also now joining that list with a cut of 1%. Kunal, any of these names, how are they shaping up on the charts? Any view on something like an Acme Solar, perhaps? We've not spoken about that stock in some time now.
Yeah, I think, actually what has happened is many of the solar stocks, the last I had seen, I think I've gone through a decent correction or a time-wise pause in the last 2-3 months or so. I was looking at Acme Solar, Vikram Solar, etc. I think these stocks have gone through a decent correction or a sideways range. It's just that I would sense it's a lack of participation, lack of interest into this sector at large, and that's why I would sense that these prices would probably come back into a further correction going forward. So I'm not too much concerned over the major price-wise correction, but I think it's a time-wise pause which could probably hit a short-term trader into investing into these names.
Okay, just taking a look at where some of these names are settling as the cash market closes. 3% uptick on Titan today, looking good. One of the top Nifty gainers on the back of good earnings. Shriram Finance also joining that list from the Nifty, a 2% uptick over there too. Right now, as of now for the Nifty, we're absolutely flat, continue to be there, but we've also slipped slightly further away from the 24,600 mark. 24,583 is where we're at. Sensex continues to be flat, as is the case with the Nifty Bank and the Nifty Small Cap Index. However, that 0.5% uptick on the Nifty Mid Cap, that continues to stay, so that looks good. From the broader end, it's actually quite even Steven, but in fact now the favor is tilted towards the decline slightly. PFC, Bharat Forge, REC, NLC India, Inox Wind, cuts of 6 to 8.5% on all of these names, and these are some names that are causing pressure to the Nifty 500. On the flip side, stellar earnings from Hitachi, a good Bernstein note coming in on Paytm, that stock up 10%, Syrma SGS, Sumitomo Chemical, BEML, Schneider Electric, Pine Labs, Allied Blenders. All of these are some stocks that are doing well from the broader end, and that is actually how the cash market is coming to an end right now, with the Nifty at 24,583. Kunal, quick thoughts on the kind of trading session that we've seen today. We've been absolutely range bound and lots of action expected tomorrow. Amphi data, that Amphi numbers will also be out, and just a quick view on how the trading session has been.
See, it's almost like 5 days the markets have grinded into this 200-point band. You know, we've been stuck over the last 5 days at 24,500 plus minus 100 points for the index, and it's getting a little bit more, I would say, tighter for the large cap stocks to show signs of any kind of a big breakout momentum. It's just that I think the real moves are actually happening across the underperforming sectors and the stocks which are beyond the Nifty 50 basket, and I think that's where a trader seems to be concentrating upon. Largely, the Bank Nifty, I think, has been having a flip-flop because we've been stuck around this 58,000 mark for the Bank Nifty. There are days where you see the PSU banking stocks outperform, like what happened the previous week, and then there are days where you see the PSU banking stocks underperform. So it's like a flip-flop action which is going on across the major sectors. But then broadly, I would sense that we're just going through a patch of consolidation. Hopefully, I think we don't extend it beyond to a certain point where the participation drops down from the index levels per se. The positive part when you look at the index parameters is that the put call ratio, which was almost at 1.6, 1.57 start of the previous week or mid of the previous week, that's cooled off quite significantly from those elevated levels. So that probably indicates that the markets are now into a balanced mode or an equilibrium zone.
And this equilibrium that you're talking about, Kunal, it seems to be slightly visible in the market because given that this is the 6th session where the cash has come into play, you've got the Nifty that between 315 and 330 has spiked by only 0.1%. So quite stable over there also, right?
Yeah. So I think that's what I was saying, that the markets are now adjusting towards this new reality. Hopefully, I think we see that effect playing very less from a closing perspective. And I think if that happens, I think the entire notion of introducing cash as a system, I think finally gets achieved.
I want to quickly also quiz you, Pashupati, with regard to how you're looking at realty. You clearly said premiumization is playing out and playing out very well for India. I wonder if realty as a pack, you expect that to continue to outperform because you've seen some very strong moves. Realty bottomed at maybe 650, 670 on the index. We're currently at 900.
Well, the reality, the reality of realty is that people are looking for triggers. As you said, premiumization is doing okay, but the next level is still chugging along. There seems to be a lot of redevelopment happening, certainly in Bombay, and that's kind of what we're seeing. So because there's such a lot of redevelopment, it's going to take the whole cycle to get the value into the realty companies. So according to me, it's a little premature to invest in them, but there will be a point at which the property prices will start moving, and then people will start buying into the realty companies. It's a good place to be. That's my personal feeling.
Pashupati, anything that's looking deep value at this point of time, or even short-term tactical opportunistic, if I can call it that? Anything in any of the sectors that's looking in that kind of a breadth?
Actually, you just need to buy a Make in India company that is not dependent on any imports and that there's a domestic demand from. There are a few in there. You can buy any of those, sit on them, and just enjoy the run. I mean, even sectors like paints, sectors like groceries, some of them may be a little bit high priced, but I think they're the place that you want to invest in because they're going to continue to do well.
Pashupati, give us the formula.
The formula. I wish I have a printing machine in my house. That's what I need. But anyway.
Yeah.
Thanks, guys.
No. Thank you, Pashupati. Thank you. Okay.